Hello, all. Joel Seek here from Harpel Financial Group Principal Advisor. Just touching base with a mid-September update in relation to an update on how the market is tracking in investments in general, but also just on the back of Are You OK Day last week as well. So just checking in to see how we're going, how my clients in Victoria are obviously travelling at the moment with the second lockdown, and also my broader clients in interstate as well. How are you travelling? Are You OK Day, a great initiative, and I guess on the back of last week, just really checking in. It can come across as a closed question, are you okay? But just expanding on that, how you're feeling, how you're travelling through this period, any issues, any pressing issues, any questions you have, any concerns. There's nothing too small or too minor or major. So please reach out. Don't feel bashful or shy. Flick us a call, a text, an email, and happy to do a Zoom hookup. I'm hoping to be catching up with clients for annual reviews towards October, November, if all going well in Victoria, and whether that be face-to-face, hopefully, or if not virtual. We've got all the means to be able to do those things. So just checking in and hoping everyone's keeping well. A quick market update and a quick summary on how we've been travelling in general. So a bit of an update for September. The markets sort of hit record highs in the US. They actually went past their previous record high after that big free fall that we experienced in March. Australia is still about 15% off that area, but slowly getting there. Slightly different stocks and makeup of the market is probably the main reason for that. The US is in the sort of growth stock area. They don't pay as many dividends, and they've got heavy weights in IT and healthcare, which have really pushed that market along. We're more sort of based around materials, financials, and we've sort of got heavy in that sector there in manufacturing. So just slight reasons for differences, and we tend to pay a little bit more dividends. Overall, in general, shares will probably be vulnerable for a while to come, 6 to 12 months. There's going to be a raft of different things that will occur. Hopefully, we won't see. I guess when we do have an adjustment or a market correction, it's not as significant as what we saw in March, which was quite unprecedented. The record sell down that we had, but also the record return over that period were the shortest and the quickest that we've ever experienced in general. I guess some of the key points and some of the key areas, starting with the negatives of the markets and the negatives and the headwinds coming into the next 6 to 12 months that we will experience, or quite likely will experience. I guess some of the main things is the coronavirus in general has yet to come under control globally. So what we're seeing around the world under different countries, different situations, just like here in Australia, different states, different situations. We've got overseas emerging markets that are sort of struggling to get it under control because they just don't have the facilities and the structure in place that we do. In the developed countries, there has been second waves, and that can pose a threat, I should say, to lockdowns or further lockdowns and issues. I guess second, it's occurring a massive hit to the economy, which we sort of expected. The economy's seen some big hits. Australia, 22% down, so which is the worst slump since the 1990s recession, and 67% of companies reported June half earnings cuts and declines, and also cuts in dividends, about 56%. So some significant hits to Australian companies in the Australian economy, which I guess was expected. And then third, the recovery going forward will be faster for some and slower for others. So, for example, travel, hospitality may take a while to get back up and running, obviously, depending on a number of big factors. But there has been a shift to some online shopping and home and educational things online. So some of the businesses have pivoted and changed their setup. And I guess seasonally, so depending on how we go with shares, August and September are generally the weakest months of the year on average for US shares. So the recent rise in the share market has had some highs, but then there's potential for short-term corrections as always. And then one of the big factors will be the US election coming up. So what will happen with the election, and how's that stability looking in America, or lack thereof, so you could speak as well. I guess some of the positives, so some of the main things that we've seen is the second wave of cases in those developed countries haven't been as deadly. That could be for a raft of different reasons, potentially more young people being infected, older people being a bit more protected, and the vulnerable as well, potentially has helped. And also I think countries starting to get a handle on better how to protect themselves, how to create, identifying, tracking or tracing mechanisms, clusters, how to get on top of it, how to wash hands, sanitize. So all those things I think are starting to help with the severity of those second waves that those countries have experienced. Really good. The second point is there's been really good progress, I should say, in vaccines. So trials, obviously there's some hurdles and some things, little stumbling blocks that'll happen along the way. As we saw last week, where there was potentially a trial issue. However, they'll work through that. They'll make sure that there's nothing missing, and they'll come to the party and hopefully continue on. So there's been several vaccines with promising trials, and they're in phase 3 trials as well. Note that mass development will be unlikely until next year, in full, but complete protection may take a while to come. However, it's more like the flu vaccine, and it's going to be a complementary treatment to the other things that are out there, such as remdesivir and steroid treatment. So it's going to be a collective, combined, and I think in this situation, it's all about confidence, and it's such a big thing and a big part to play when we talk about market confidence and economic confidence and health confidence as well. And then the one of the third points is that easing of the monetary policy, which is the lowering of the interest rates. The government's keeping interest rates low, and that's sort of both domestically here in Australia, but around the world as well, just historically low interest rates. And I think in terms of the economic stimulus that we've seen as well, is we've never seen such swift policy action. Usually it takes a while to get these measures in place, but this was such an odd or a strange or an unseen scenario that the government's intervened so quickly and came out with a lot of swift policy measures. So all those things help to spur, again, like we talk about vaccines, spur confidence and health improvements. Low interest rates and government stimuluses help spur economic activity and help spur investor and consumer confidence and sentiment, which then flows on to when we talk about recoveries as well. So on balance, when we're balancing up the negatives and the positives, the pros and cons, we're starting to see the pros coming up and starting to lean that balance there. We're going to see vulnerability in the short term. There'll be setbacks, and there'll be things that will occur with the virus that we weren't expecting, because it is such a virus that we haven't really seen or experienced as a global collective. And the speed of the economic recovery will differ. It will differ between every country's. There'll be headwinds. The US election, US-China trade tensions will be there as well. But as mentioned before, hopefully the pullback will not be as severe as we'd experienced before, and there's more positives tipping the scale that way as well. So overall, we're keeping an eye on things here. Please, on the back of my introduction to this, reach out, touch base if you have any questions, any concerns, anything you'd like to go through. We're always here to help. And only a phone call or an email away, and also a video conference away as well if we need to. Take care. Joel Seach, Harpel Financial Group. Hope you're keeping well. Bye now.